A very good morning and thank you so much for your time. Firstly, if you look at your numbers, although the Indigo profit has fallen short of the street estimates, but the company has managed to sail through the uncertain times rather, and you have attributed this to multiple external challenges. Could you help quantify the impact of specific disruptions such as the Telgam attack, Operation Sindoor, and the closure of Pakistani airspace, and have all these concerns now subsided?
The quarter actually started as a continuation clearly of the last quarter of FY25, which was a very strong quarter. And we saw the start in April was also very strong at that point in time. But then, of course, during the month of April with the Telgam attack, and then in May was Operation Sindoor, airspace closures, and obviously in June we had the AI171, which had a very significant impact on the overall sentiment in the market. And I would say despite these overall sentiments, the Indian aviation market still grew by 5 to 6% in this quarter as compared to the same quarter last year. I think there would be other markets in the world where traffic would be down, but in this case, traffic was still up. So traffic was expected to grow by 5 to 6%, or has been expected to grow by 5 to 6%. Final figures on the international side are not in yet. And Indigo has grown an impressive 12% in that very same quarter. So with these adverse circumstances, I think Indigo has demonstrated to be very agile in a resilient quarter and market.
Peter, hi, talking about the load factor as well as the revenue per passenger. Now, the load factor was 86.7% in the last quarter, and now we see it 84.6%. So clearly, the load factor and the revenue per passenger have dipped despite higher traffic. Now, what led to this and how do you plan to address it?
Well, Indigo has a very broad and wide network across the nation, and clearly the northern part of India, post the terrorist attack and their Operation Sindoor, has been significantly affected by these two outside events. And against that backdrop, still we had an overall network load factor of 85%, which is a very significant and a very good percentage, and significantly higher than some of the others in the industry. So overall, looking at what Indigo has done and how we have been able to adjust the network, deal with these cancellations, at the time of Operation Sindoor, we had to cancel really some 170 flights on a daily basis. And despite all that, we have been able to still grow 12% quarter over quarter, and indeed had a load factor of 85% in this quarter.
But Peter, what was the impact of the 18 aircraft reduction on capacity and the revenue impact as well? And also, are you on track to restore the grounded planes by early 2026?
No, I think the figure is somewhat different. We reached the worst point in the middle of last year when it came to the number of grounded aircraft. At that point, we had in the high 70s, close to 80 planes grounded. Ever since, the number of grounded planes have been reduced, and we're now in the range of 40s. We do expect that number to continue to further decline, and we haven't given a precise timeline when it will be totally declined. And we're obviously in close contact with the suppliers for engines and planes in order to have a continued decline in the number of grounded aircraft. I think what's important for us is to make sure that we deliver an adequate capacity in the market. And we've been able to deal actually all the time with an adequate number of mitigating measures to make sure that we could still live up to our capacity guidance. And even in this first quarter, we have been able to have a 16% capacity growth. And in the call today, we have continued to maintain our capacity guidance for the entire year in the early double-digit numbers.
Absolutely. Peter, that was exactly my next question on capacity. You had earlier guided for double-digit capacity growth for FY26, and now you're expecting capacity to grow in mid to high single digits in quarter two. Am I getting that right?
Absolutely. So we maintain our annual capacity guidance. What we do, and India becomes more and more like some other mature markets in the world with a stronger seasonality. So we see that traditionally Q2 is a quarter which is more soft from a market perspective. Actually, we have seen a relatively strong start, but still the quarter is traditionally a softer quarter, and we are tuning our capacity in line with the market demand. And whatever we've been doing so far, both in the first quarter and in the second quarter, with the exception, of course, of the cancellations driven by Operation Sindoor, but with that, we're very much in line with our initial planning, and therefore we can maintain our capacity guidance, which indeed is a single-digit number in Q2 as we planned, and a strong growth in Q3 and Q4 in order to make sure that we live up to our annual capacity guidance of that early double-digit number.
Peter, also help us understand that how are the new long-haul routes to Manchester and Amsterdam performing? How are your expansion plans in the domestic and the international market shaping up, and any other international route being added?
Well, the internationalization is very much part of Indigo's strategy. And when we rolled out our strategy back in 22 towards new heights and across new frontiers, internationalization was a very important part of it. And over the past 2-3 years, we have done a lot of internationalization, mostly in the region. But just to refresh your memory, we started flights into Central Asia, we started flights into Africa, and we started flights into Indonesia. Clearly, with the damp leases we have now for the 787, it allowed us indeed to start operations by July 1st, both to Amsterdam and Manchester. The response from the market has been very, very positive, both here in India as well as overseas. And we see foreigners coming to India, but also choosing India as a point to connect, very much in line with the ambition of the Indian government to develop India also as an international hub for people traveling here, as a global place for aviation. Actually, the response has been positive, and with that response, we have decided to increase our frequency level to Manchester, Mumbai, Manchester, from 3 to 4 as per the middle of September, and in Amsterdam from 3 to 6 as per the middle of September. And earlier we have mentioned that we expect to start flights into London and Copenhagen before the end of this year, and Athens early next year.
Peter, as they say, change is inevitable, and then there is competition everywhere. How do you see competitive intensity shaping up in FY26 with peers expanding and new players emerging as well?
Well, there's competition, and there's always competition, and competition is a good thing. I think what Indigo has as a very strong starting point is our cost leadership allows us to continue deliver one of our very important customer promises, being affordable fares. We've done that domestically, and we're now doing that also international. And our product, we have tuned to what we call a fit-for-purpose product, where now on Amsterdam and Manchester we have hot meals, and increasingly we see that our stretch, our business class product, which we operate on the nation's busiest and business routes, is now also being introduced on some international routes, selective international routes from India into Bangkok, and soon also Singapore and Dubai will be added to those routes. So our fit-for-purpose cost leadership would allow us to compete very effectively, and I think more and more people are subscribing to our loyalty program. It was announced only last year, and today we already have 3.8 million of people signing up to our blue chip loyalty program.
All right, Peter, this brings to our last question, that what, as per you, could really be the biggest macro risk for this particular year? Could it be the fuel price surge or the forex movement, or there could be some demand uncertainty led by the global turmoil?
We have seen actually over the past couple of quarters a very stable and benign fuel price environment, and we see no reason for that to change on the short term. When it comes to clearly demand, I think the Indian economy continues to grow. The outlook is still very positive, and with that, the correlation between economic growth and demand obviously is there. Obviously, a lot of geopolitical issues have been there in this quarter. That was exactly one of the elements influencing this quarter. But Indigo has demonstrated, I would say, very strong agility and ability to deal with these challenges.
Absolutely, Peter. On that note, we'll let you go. Thank you so much for joining with us, and best wishes to you and Interglobe Aviation Indigo for the coming quarters.